In this video, I'm going over 7 things that you need to know before opening a high yield savings account. You know that a majority of Americans, 57% of them, still keep their money in a traditional savings account. When I signed up for my first high yield savings account, I honestly didn't know what to expect. Over the years, I've learned some lessons that I'm going to share with you today. Be sure to stay to the end where I'm going to go over the biggest takeaway that I've learned over years of using high yield savings accounts. Let's make sure we understand what a high yield savings account is. If you have a checking account at your local traditional bank, you probably have a savings account there too, because for years that's just what we did. But years ago, traditional banks stopped paying high interest. A high yield savings account is an account that typically offers higher interest than a traditional savings account. Keep in mind, most of these high yield savings accounts are only available online. Traditional banks like Bank of America have thousands of branches all over the country, and that costs money. We're talking real estate costs and labor costs. So they actually figured out they can actually save money and cover all these costs by keeping all that high interest that they're earning and not paying out. This is where online banks saw opportunity. Since they're 100% online, you can't go into a branch, but because of that, operational costs of these banks are much lower, so they can pass on those savings to customers in the form of high interest. In many cases, 10 times more than usual. Traditional banks interest rates that they pay on their savings accounts traditionally hover around 0.01%. That's literally pennies. Most of the current high yield savings accounts are paying around 4%. Just 400 times that amount that the traditional banks are paying. And because these accounts often compound daily, you're often earning interest every single day. Let's just say, for example, you have $35,000 and you keep that money at your local brick and mortar bank. Well, your annual interest earned on that money each year being paid out at 0.01% comes out to a whopping $3.50. If instead you decided to open up a high yield savings account and deposit your money there instead, the same amount of money kept at the high yield savings account, instead of earning $3.50 that year, you would have earned $1,225. That's at an interest rate at 3.5%. That's a massive difference, and it's just basically free money waiting on you. If you're new here, welcome. My name is Ace, and you're watching the Ace Hunley channel. If you're not new, welcome back. I love to share information to help you improve your situation, so if you like that, be sure to subscribe so you don't miss out on future content. With that said, let's get to the 7 things that you need to know before opening up a high yield savings account. The first one might surprise you, but not all high yield savings accounts protect your money. For your money to actually be safe, it needs to be covered by either FDIC insurance for banks or NCUA insurance for credit unions. This actually protects your money up to $250,000 per person per bank, in case the bank were to fail or go bankrupt. If you have more than that at any one single bank, congratulations on reaching that milestone, but you may want to consider looking around for a high yield savings account that either adds more coverage or just spread your money across several different banks. So just be sure to make sure to look for phrases like FDIC insured or NCUA insured on the bank's website before you open that account. Or you could take it a step further and search for the bank's name on the official FDIC insurance website or the NCUA website just for confirmation. Second thing that I wasn't aware of when I went to open up my first high yield savings account was you can't count on the advertised interest rate that they're putting on their website to stay the same for the next few months or even the next few weeks. So that's why I choose not to spend the money that I earn in my high yield savings account, aka HYSA, like its normal consistent income. The 4 to 5% APY percent that you might see today could go away any day. So don't put yourself in a financial obligation based on the percentage that the HYSA is advertising to pay out. You could find yourself in financial trouble later. Number 3, when you have a HYSA, you have to pay taxes on the amount you earn because the IRS sees this money as regular income, which is taxable. How this works is in each given year, if you were to earn $10 or more in interest, your bank will send you a 1099 INT form. You need to report that income on your taxes. A lot of people aren't familiar with this because they keep their money at a traditional bank like Bank of America, who, by the way, pays so little interest that a lot of people don't even reach the $10 that it takes to receive the 1099. So just remember to set aside some money for taxes at the end of the year, because most likely you won't get to keep every single penny. But regardless of taxes, you're still going to earn a big chunk of money relative relative to the amount that you would have earned at a traditional bank, depending on the amount you have in your savings. The fourth thing that I wasn't aware of when I went to open up my first HYSA is it's important to understand the exact requirements to earn the interest rate, because some of these accounts actually require a minimum balance. For example, in order to earn 4.75% from Open Bank, you actually have to do a minimum deposit of $500. Most of the online high yield savings accounts don't actually have a minimum balance, but it's still important to check and make sure before you sign up, because it does take some time and you don't want to waste it. The fifth thing that I wasn't really aware of years ago was the number of accounts that you sign up for doesn't really matter, because there is no impact on your credit score or anything like that. So with the accounts that give a cash bonus or extra yield for a certain amount of time, feel free to stack benefits from different accounts to your favor in your situation. The point is, don't be afraid to open up multiple accounts or try different banks, because that's probably the best way to figure out which one works best for you. This is actually a strategy that I'm starting to see more and more people start to use, especially if they can get a $200 signing bonus at this bank and then go to another bank and get another $100. I mean, why not? Which reminds me, SoFi Bank is actually offering a $300 sign up bonus as long as you set up direct deposit. If you use the special link in the description below, you'll actually get an extra $25. That's literally free money on top of paying you a high interest rate and providing you a free debit card. Which brings me to my next point. While some online high yield savings accounts offer a free ATM card for easy cash withdrawals, not all online savings banks do that, because after all, it's meant for saving, not for spending. Many times, if you need cash in hand, you're going to have to transfer money from your online high yield savings account to your local brick and mortar where you can use your ATM withdrawal. The last and final thing that I've come to learn throughout the years of using high yield savings account is, although they offer very high interest, which is good for the short term when you need money for the next few months, they're just not the very best for long-term investing. That's because high yield savings accounts typically don't keep up with inflation, which just means every month you may be losing buying power, even though each month you can log in and see that your savings balance is actually moving up. If you want to know a better way to invest your money for the long term, I made a special video all about it, and I'll put the link right here. So that's going to be it for this video, guys. If you feel I've earned it, smash that like button and remember to subscribe to see more content. Thank you guys for watching, and I'll see you on the next video.